Hi traders. So one thing that I've updated to my channel is that there are basically three news events that you kind of want to avoid the day before these specific news events, and they are CPI or FOMC and NFP. So the days before these specific events, you want to completely avoid trading because of it creates choppy price action, or I'd say also it creates seek and destroy markets. A seek and destroy market is basically when, I'll show you now how it looks like. When there's a fair value gap like this, and then the market moves lower, and then it doesn't hold or rather respect this fair value gap. So whenever we have a fair value gap like this one, we have a bullish fair value gap, right? This is the H4 chart, by the way. You should apply it on the H1 time frame, but I'm just making an example because of obviously it will be for that specific time period that you are looking at, in order to know that we are in a seek and destroy market. We have a fair value gap like this, the market retraces inside of this fair value gap and then moves higher, but then it doesn't hold. What happens is that it creates another fair value gap lower, which is this fair value gap, but then still it fails to hold. So that shows you that we are in a seek and destroy market, and normally this happens days before big news events are about to be released. So as you can see, we could say that the market is accumulating orders. So that's what I wanted to clear out on the specific video. And obviously, let me just make a quick update on the dollar index, right? And remember when we were at these specific levels, we was able to depict that the dollar is going to rally higher, right, from this specific level, and we outlined this buy side liquidity. So how did we know that the market is going to turn at this area? When you use your Fibonacci from this low to this high, you will get optimal trade entry, right? And how the market reacts from this specific optimal trade entry will tell you whether if we are going to have a reversal or not, right? So I switched to the smaller time frames, and I was aware that okay, we reached 61%, 61.8% retracement level, and then we started moving higher, shifting market structure above that high. See, notice how you don't have to be inside this level. It takes time to be inside these specific levels, and some of us, we don't have that confidence of entering at that specific level. So you want to wait for a shift in market structure, which happened at this specific low, and then the moves high and then retraces inside, and then you will be looking for buying opportunities, because of we had the OTE on the daily time frame. What I want to also cover is the importance of previous cycles highs and lows. Right now on the dollar, the previous cycles high and lows are these specific high and lows. 2023's high and lows are these highs and lows, right? And obviously we have 2022's, which is this low and that high, but I'm not gonna mark it out. So we want to see if the market is moving away from the previous quarter's high or previous cycle's high, previous cycle's low. So when you look at this chart, and I'll be marking the range of the previous cycle, And as you can see, when we were reacting from the daily optimal trade entry, we was inside of a discount market which is below 50%. Basically, a discount market is below 50%, and a premium market is above 50%. So when we are looking for buying opportunities, it is safe to be looking for buying opportunities below 50%. So looking at the previous cycle, we can see that these levels were below 50%, which is my level. And basically, when the year started, we were reacting off from the previous cycle's rejection block. So that could be indicating bullish price movement. So obviously, that's how I was also able to depict that the dollar is going to move inside of this monthly fair value gap, right? So January, I took attention to this fair value gap, and then we did move inside of it. We did reject, but then on smaller time frames and other time frames, we were looking kind of bullish, and we failed to form fair value gaps lower on weekly time frames after rejecting from this fair value gap. So that already shows you that there's a slightly difference taking place whereby the market won't continue moving low, and this fair value gap, it is unlikely to hold. So if the market is moving higher, where is it going to move higher to? We are moving from this rejection block, and we are moving higher to the previous cycle's high, which is this buy side liquidity resting above this high. And these specific cycles, they also apply on weekly standpoint of view, right? Remember, we have the 4 quarters, and the 4 quarters will help you to decipher these previous cycles that I'm referring to. We have the quadrennial cycle, remember, which moves in tandem with elections. Remember that. And this year specifically is quarter 2 of the quadrennial cycle, which started 2023. So this year will have a lot of opportunities. Last year had a lot of opportunities. I'm not saying it didn't, but I'm saying that the price action will be much more smooth this year. And I want to make something very clear, that you need to understand that we are still in the first quarter of the year, and we are about to enter the second quarter very soon. And that's normally after the second quarter, the market starts offering fair value a lot, should I say specifically. So the dollar has left imbalances at these specific levels, and it keeps on forming fair values moving higher. So we must take into consideration of these fair values that it has left, because of these chances that it will retrace and move inside of those fair values to only move higher again. What makes the market complex is the retracement part, and we tend to leave that out, right? And we should always remember not to do that, because of the market will retrace, and sometimes it won't mean that you are not right, but it simply means that you are not inside of the market at the right time. And that's the thing about smart money concepts. You actually realize your mistakes very fast, and sometimes you'll realize most of the time you were early in entry, right? And it doesn't necessarily mean that you are wrong per se. So, guys, please do apply what I've just shown you, right? In terms of these yearly cycles. And if you look at GBP USD, and the reason why I was bearish is because of the previous cycle's rejection block, which is this specific candle. Price reacted from that rejection block, as you can see. So if price is reacting from that rejection block, where could be moving to? The previous cycle's low. But this is too flashy red, because of it is too low. So where would you be targeting first? My attention comes to this fair value gap that hasn't been traded to, and the fact that this specific candle closed almost below it, almost below the high of, actually it did close below, this specific candle's high. So the third candle closed below this high, meaning that price will immediately retrace inside of this fair value gap. So we just dipped into this rejection block, and then we had a reaction towards it or from it. And what's nice about it is that we formed a fair value gap lower. So that's already showing you that price is completely bearish. You see, we have, what's important is also that whenever price moves above an old high or to a rejection block, it needs to form a fair value. You see how we formed this fair value and then we moved higher, and then we disrespected that very same fair value. That's very important because of these two moves shows you that there's a reversal taking place. So we have a fair value gap that moves higher, and we have another fair value gap that moves lower. So that alone to me proves a market reversal. We waited buy stops at this high, which was formed at the 28th of December 2023. We rated that buy stops, but what's important is before we rated that buy stops, did we form a fair value? Yes, we did form a fair value, and then we moved lower, formed another fair value gap lower. That's a reversal, guys, and it applies on all time frames. But ideally, obviously, you wanna focus on weekly, daily, and the 4-hour time frame. So that is all for this video, guys.